Hello, my name is Steve Bigelow with the Candlestick Forum. The markets had an opportunity to take some profits based upon the sell signals that were created in the markets yesterday. For example, after a couple indecisive days, they had a shooting star signal that would have indicated that if the markets had opened lower today, it was definitely a good time to take profits and be going short. The fact that when we woke up and saw the pre-market futures were going to open this market strong told us that this uptrend was still in progress. Same scenario on the NASDAQ. Yesterday, it did a bearish engulfing signal. Had it opened lower today, or we woke up and saw the pre-market futures were showing that the indexes were opening lower, that would have been a good time to also be taking profits and going short. So this uptrend continues to make some very strong pattern breakouts. The bobble breakout in the gold stocks is being created by the fact that you can see the J-hook pattern in gold prices moving up strong through the 50-day moving average. This has created a bobble breakout in FNV, one of the gold stocks. And notice what it did. Bounced off the T line, did a kicker type signal, gapping up through the 200. Very strong indication there's going to be more upside. KL did a bobble breakout last week, now doing a J-hook pattern with another kicker signal, implying there's going to be a lot more strength to this uptrend. So this is merely analyzing the patterns that tell you what the high probability results are expected to be. So we're looking at the same thing on AMD. Notice it failed up here, pulled back to the T-line, did a kicker type signal today, closed right at the 50-day moving average. This makes for a very easy entry strategy. If it opens positive, what's it telling you? It's confirming that the 50-day moving average is not going to act as resistance, that your J-hook pattern bobble breakout is occurring, and it's also indicating that the kicker signal, which implied more upside, is still in effect. This produces a very high probability trade result, expecting wave one, wave three, bringing you back up into this area. Looks like there's a little teeny gap up here. So anytime we see the high probability trade setups, as we saw last week on TRTN, with the hammers right on the 50 being confirmed, this is the expected result, that there's going to be more upside. So the candlestick signals and patterns tell you definitely what's going on in investor sentiment. Lean hogs have had a strong uptrend for a couple of months now. But last week, you saw the big bearish left-right combo closing below the T-line. Not only is that a sell signal that closed below the T-line, but if you just interpret what that means, is that there was a drastic change of investor sentiment. Notice they tried to bring it back up, but today when it started trading lower, it especially came down through that level, that was a good time to be shorting because of that information right there. This trade was down the limit, maximizing your profits. Looks like it could even trade lower. First target, second target. This is not rocket science. This is just taking advantage of what the Japanese rice traders have provided for us. Right now, with the indexes trading above the T-line with showing no real sell signals, you stay long. But because we're in the overbought condition, you just want to be a little bit more attentive to making sure your safety stops are in place. That'll be it. We'll see you in the chat rooms.